forextradingmagic.com. It's now 6:58 p.m. on Tuesday, September 9, 2014. And we're going to look at our volume profile for the New Zealand dollar, US dollar daily. Alright, now when I look at this pair, what I see is a downside acceleration, and we'll say why. Okay, so we can see that both trends are up, the weekly and the daily. Okay, so that means that we should only be looking for short trades. If we want to drop down to the intraday time frames, or 4-hour or 1 hour, that means that we should be looking for only a short trade setups in those time frames for today. Okay, and now we want to look at volume here, and we see that our accelerator shows downside volume acceleration. Okay, so that's what we want to see. Okay, the volume acceleration in the direction of the trend, right? So now we know that there's volume acceleration, but it's important to look at where the bar closed. Okay, we can see that the bar closed below our dot here, so that confirms the strength on the closing basis, and we close below the low of the prior bar, which also confirms the downside acceleration. Okay, so in this case, we need to see here to where will new selling enter the market. We want to look for short situations, but we want to get in short when selling is entering the market. Okay, and so if we look down here, we can't see where selling is entering the market. We know where selling is going to enter the market when our arrow is below the bar. Okay, and we know where buying is going to enter the market by our arrows above the bar. Okay, so but since we can't see where any new selling will come into the market here, okay, then what we can do is drop down to the 4-hour. We know that if we get below the low here, okay, no new buying is going to come into the market as long as we're within the range of this bar. Okay, some of these short sellers are going to be have their stops intraday inside of this bar. Okay, so that's going to cause some buying inside of this bar, and this is why usually you'll see an up move like we're getting right now. Okay, so now if that's the case, then if we can't see where there's no new selling gonna come into the market by an arrow below a bar here, okay, we need to see where buying is going to leave the market. So, and that's going to be below the low of this bar. Okay, so again, as long as price is inside the range of this bar, the high-low range, then there will be some intraday buying in here. Okay, but when we get below the range of the bar, none of these shorts will have an incentive to start buying back. So then below here would be our target entry on a daily basis. However, now we can drop down to the 4-hour and say, okay, right, now we want to, on the 4-hour, we can drop down, and when we get a bar that closes with an arrow beneath the bar, okay, on the 4-hour basis, okay, then we can look to get in short on a close below that particular bar on an intraday basis. And it works the same way, okay, on the hourly basis. For instance, here on the hourly basis, here we see we have arrows below the bar. Okay, that means these are buyer bars. Okay, if we get below them, we expect some selling to start. Okay, however, the 1-hour time frame is so small, I prefer at least the 4-hour time frame. And then you can take a couple of positions and take off half your position here. Then if we get an intraday close below where there's any potential buying, okay, then get back in, okay, or just take off half your position here and let it ride. Okay, all right, see you later.